All right. This is Kevin, aka the Common Sense Teacher. We've been working. Let me get this right now. So let me get Latanya added on. We had some technical difficulties about 5 minutes ago, about 30 seconds ago. So let me go and get her added. Hey, tell me where you're from. Give me some love. Show me that you're here. Show me that you care. Show me that if you're getting value, say that really helped me. I didn't know that. So let me get some of my friends on real quick so we can get it working. Latanya, where you at? Let me see. All right, so I just invited Latanya to the live event. What's going on, everyone? This is Kevin, aka Mr. We've Been Working. What's up going on, Allison? Good to see you. Good to see you. Hey, great talk the other day. I needed that. That really filled my soul up. So I'm gonna give you all a little bit of time to get on, and we're gonna get straight into it. So I'm gonna get Latanya on here real quick because that's the credit queen. I'm the cash flow king. Just teaching you some quick basic steps that you can do right now to improve your cash flow. So definitely don't want to miss out. So let me get Latanya on here real quick. What's up, Unc? What's going on? What's going on, Anthony Jones? That's my uncle right there. What's going on with you? Jeffrey, what's good? What's good? What's going on? Let me get Latanya on here real quick and then we'll get started. I want to make sure that she's on here because she's the credit queen. And she gave me the name Cashflow Queen. Cashflow King. I said Queen. Cashflow King. So I'm just going to take that. Let me see. So she should be coming on in a second. I'm going to give her a minute. Give me 1 minute to get everything set up, and I'll be right back. Be right back. All right. So let me see if I can get Latanya on here real quick. All right, quick announcement. Next weekend, next Saturday, October 27th, Jackson, Mississippi is where it's going to be going down. You don't want to miss it. If you got anyone in the area, send them out if they need help with their cash flow, their credit. Latanya has successfully helped, I know, at least almost 100 people improve their credit. So you don't want to like sleep on Latanya. She is great at what she does. Great at what she does. I don't know how someone with her schedule can do everything that she does. She's a school teacher in the principal program herself in Mississippi. She's also a basketball coach. She does all of it, and she still makes time, to do credit too. So big ups to Latanya. Let me see if I can get on one more time, see where she is. And yeah, I invited her, so she should be on in a minute. Let me go see if I can find her. Latanya, where you? All right, so just send a text message to get on. Hey, what's going on, Ron? What's good? What's good? What's good? Candace, what's good? What's going on, y'all? Hey, thank y'all for joining us on a Saturday night. Y'all could be out kicking it, partying, all that, but you joining us tonight, so I really do appreciate it. Really do appreciate it. Okay, she said she's about to get on, so we can get right into it. So I'm gonna give you 9 steps to improve your cash flow. Like next, you can do these 9 steps starting tomorrow, as soon as tomorrow. These 9 steps are actually really good. It's something that I implemented in my life a long time ago. If you don't know, I went through a divorce. I was like, man, how am I going to get my credit back up? How am I going to get my cash flow back up? Because the divorce take everything out of you. How am I going to make it? And this was 4 years ago. 4 years ago. I'm real transparent about my journey. I don't want people to ever think that it was easy or that it was something that was given to me. So I literally was able to not only change my credit situation, but my cash flow situation. Everything I was able to change because I changed my mindset and I started to implement a few principles that really changed my life. And these principles, when I say a principle, a lot of people don't understand. A principle is something that you actually live by every single day. It's not something that goes away. It's something you make adjustments around. And so one of my principles that really, really kept me focused was to have, let me see if I get Latanya. She on here now. I'll answer from live guests. Let's give her a second. So I really built a principle around my behavior. And here's the thing. I learned this on this journey. In order to really change your behavior, you have to change your actions in your environment. if you don't change those two things, your behavior actually determines your actions. And so you have to really make changes in those areas. And once you do, life is so much easier. But most times people don't want to change their behavior, so they never change their actions. And so these principles I'm gonna go over tonight that we're gonna talk about is actually from where I learned and what I established over time. So look, these things work for me. I can't say they're gonna work for you because I can tell you all day what to do. I can tell you what worked for me all day. But if you don't put in the work and the action, you won't get the same results. And look, I'm not all the way there yet. I'm not there yet. But I'm getting there. I'm getting there. And so I'm going to give you tonight, and Latanya, when she gets on, she's going to give you some things from credit, and I'm going to give you some things from cash flow to really, really add fuel to what you have going on. So let me see. I see her right here. Latanya, can you may have to get off of the last live feed that we did. I don't know if that's just, or you may have to like completely get off Facebook, not log off, but get off and then get back on. So try that. I'm gonna go over some of the cash flow, the 9 things, because people are hopping on. But as I go through it, I just bring you on whenever it's time to get back on, or whenever you can get through. Give me like a thumbs up if that makes sense. Hey Ryan, you completely right. Hey, we talked about that last week when you were here. Hey, thank you for meeting up with me. We talked about that last week, that you really have to put into action, but I want y'all to get this. Action or energy without direction leads to destruction. Let me say that again. Oh, I see you, Latanya. You're on now. Action or energy without direction can lead you to destruction. Now, what that means is this. A lot of people can have movement, but that don't necessarily mean you have progress. Let me repeat that again. A lot of people has movement, but that doesn't mean that you're progressing. And so you can be busy. You can be busy, super busy. I was this person too. Busy doing everything else for everyone else. And sometimes busy solving problems for other people, but you can't even solve your own problem. And so once I realized that I had to really, really go within myself, I learned that I had to, A, change my environment. And Ron, we talked about this. B, my environment shaped my actions. In most cases, that's the whole genetics versus I can't think of the name. I can't get it out. Somebody help me. Genes versus nature. That's it. Genes versus nature. I think that's right. The whole argument with that. But your environment is everything. Look, your environment gives you the program that you follow. So let me get that. Latanya not on yet, but I would just get started without her, and then we'll get it back on in a second. All right. So let me give you the first tip, or the first of the 9. Number 1, everyone needs to do this. Everyone has to have this. It's called a will. You have to set up a will for your family. Now, some people say, well, how does that improve my cash flow now? It doesn't necessarily improve your cash flow now, but it protects it. Most times people, when death happens, you see a lot of people, and they invest in death. And let me say this. Most times people, I use my example. Most times black people, they don't have a will. And so when that person dies or passes away, I talked to my grandma about this. I said, why do people profit or try to profit off of someone else's death?
Can you hear me?
I can.
Huh?
Your end is we didn't have
what's going on? If I iPad, it doesn't connect, and the only way I can try to do it is with my iPhone.
Don't worry about it.
Okay. It's that I can get my AirPods and see if that will help.
Good.
Okay.
Let's bro. All right. So I gave you one of the 9. Everyone needs to create a wheel. Because now for the next generation.
Let me get my AirPods for a minute. Hold on.
Okay. The Tanya is on. Ah, that worked. Whatever you did, that worked?
Can you hear me better now?
Way better.
I can.
Way better.
Okay. I
It
don't
was
know.
you.
Maybe it's,
It was
yeah,
you.
okay. Okay.
It was you. It was you, Latanya.
It was me. I'll take the
It was
fall.
a credit queen messing us on this joke. All right. Hey, thank you, Allison. So what I was telling everyone was the 9 steps that you need to get to really create. And Ryan laughing at us. The 9 steps to create more cash flow, not only for now but in the future too. And the first thing I talked about was creating a will, because you want to leave behind generational wealth. Most times, and you know what? I can't speak just for the Black community. I can speak for what I've been through. Most times when someone dies, there's either a collection play going around or people trying to profit off of their death. And if I'm not telling the truth, somebody stop me now. And Latanya, have you experienced that before?
I have. Mm-hmm.
And so
Yeah.
what you want to do is create a will, because a will tells people exactly what to do. Like you can't
Right.
go outside the will. And so get a will. Look, you can create a will for, I can't say for free, but you can create a will for a very, very low price, and it'll stop a lot of arguing and bickering back and forth. So create a will. Get you a will. Would you agree?
Okay. I agree.
All
Can you
right. So
hear me? Okay.
we can.
Right.
We can. Hey, what's going on, Miss Polk? What's going on, Mr. Curry? A trust too. You're right. A trust. Yeah, both of them. Both of them.
Right.
Get both of them if you can. But I just highly recommend people start off by just simply getting a wheel first. Like the simplest thing, get it done first. So you're right. You're right. All right, number two. Number two. And this is one that's gonna come into play for you. Do you recommend people pay off all credit cards?
Me?
Yeah, you the credit queen. That's number two. Number two is pay off all credit cards.
Kevin, I'm going to be honest with you. I'm a thorough believer in people paying off of their debt that they owe. But after reading and researching a lot of things, I'm not advocating in any type of way. Hold on, let me cut this. I'm not advocating in any type of way that people be negligent of their bills, that they do not understand money management, right? But I do know that in certain situations where it could have been, you shared your story at the beginning of the video where you went through a divorce. I went through a divorce as well recently this year. And that's why I know that's one thing that you and I have used to empower people financially is through our stories. And in no way am I, asking anyone to be irresponsible, not learn money management. But I do know that in certain situations, it has been financial more beneficial for people that when those account has been charged off to collections, or well, rather collection has paid for their debt for pennies on the dollars, meaning that
Explain that.
Once someone pay for your debt, then you really have to ask yourself, common knowledge, how do I owe it? Kevin, if I borrow money from you, and John comes in and says, "Look, I'll buy Latanya's debt from you, and I'll be the responsible person, right, from getting that money from her now, and I will take that pressure off of you." You really have to ask yourself, well, if my agreement and services was with Kevin, now how do I owe John? And that's how collection works. Charge-offs, I tell people all the time, if a credit card company is offering you a charge-off, if it's over $600, you will be taxed on that at the end of the year in a 1099 form. Yep. However, if you know how to use the verbiage, the jargon, and the legality of the credit bureau and the laws and guidelines that the Fair Credit Reporting Act has in place for you, that you can also pay the lesser amount and at the same time not have that charge off even report to your credit report where it's hurting you both financially and in a credit situation.
Wow. You know what, Latanya? You said a whole lot. The Lacey said she's speaking. And not that you said a whole lot that didn't have any meaning to it. You said a whole lot that people need to know. Like,
Right.
here's the thing. The 9 steps is pay off your credit cards if they're not charged off. But but
Right.
but you want to understand, and we talk about this all the time. 65% of your credit score is based on either on time payments and DTI being low. Is that correct?
That's true.
And
That's true.
so
Kevin, you said DTI?
debt to income ratio.
Yeah, you have to break that down.
Ah,
Come on,
my bad,
teacher.
my bad.
Yeah,
My
come on.
bad.
I know.
Debt to income ratio. And
Right.
so by understanding that if it's charged off, that you really are not responsible for that debt because somebody bought it from somebody else and tried to come and get you to get it.
Right.
And they ain't got it, but they're trying to get you. And you ain't got it. but I'm saying you really want to find a way to find that balance and paying off your credit cards if they're not in charge of, because in it like 30% is like 30, you want to get it below 30%.
Correct.
Am I
Yeah.
saying right? Look,
You're right. You're right.
I'm not the credit person. I'm not the credit person.
Yeah, but you're knowledgeable and you're right. You're right.
So really look at that. The next one is this. Latan, you drop mics with that, so we gonna just keep moving. We're gonna keep moving.
Mm-hmm.
So the next step 3. So step 1 was get a will. Step 2 was pay off our credit cards if they not charged off. Essentially,
Right.
that's what the credit queen said. Number 3, and look, this is something that is very, very important. And I don't care if you're young or old, but really if you're young, go get you some term life insurance. And let me tell you why I recommend term. Look, I'm a licensed insurance agent. I was for a long time with the state of Arkansas. Look, insurance create what's called an instant estate. And what that means is that you literally could get a term life policy for $25 or less, if it depends on your age. I can't tell you how much it's going to cost. You can get a term life policy, and when you pay that $25, that policy is now worth $250,000, $300,000, $100,000, whatever you get. And so now, if you pass away or if something happens, you're not leaving your family behind in a panic trying to figure out how they're gonna bury you. You actually leave behind generational stuff, like something that their kids can use. So the reason I say term life policy is because the reason you get term is because you can literally get a term policy for the next 20 years, 20 or 30 years. Whatever you set it up. I can't tell you what to do, but whatever you set it up. Next 20 or 30 years, pay that $25 a month or whatever you're going to pay a month, your premium, whatever it is a month. And now you have $200,000, $300,000, $400,000 that if you passed away, you can pay for your children's tuition. You can help your children start their new business. You can have your family feel comfortable. You can pay off all your debts. All those things can happen, but you have to get that term life policy set up. Right. And you can pay off the creditors. You can have good credit when you're dead. I'm just joking. That was a joke. But you can have it. You can have it. Now, any advice from a credit standpoint? What's going on, Brett?
Hello, Brett. Need that info.
All right, let's keep it moving then. Number four. And I'm looking at my screen because this is actually a note card you can find online. I'm not even gonna try to fake y'all. Like I look, a lot of information you can find by reading, but it's not explained like we explaining it now. Like Latanya just broke down the charge-off part of the credit. This is not going to explain like that online. But these 9 steps is something that I found a while back from financial advice. It was a financial guy. It's a book, but still, get you. Yes, Allison. Absolutely correct. All right, number 4, fund IRAs and SEPs to the max. So if you have any retirement, an individual retirement account, you want to fund that to the max as much as you can. You want to fund that to the max. And I'm not going to stay in there long because I'm a big person on investing, but I'm not a big person on giving investment advice. Because some people are taking like, well, Kevin told me to do this, and I went and did this, and I lost money. Now, don't blame me. All right, next we have number 5. Ooh, this is gonna hurt a little bit, Latanya. And I want you to expand on this because I know there's a lot of people that come to you to get good credit to go and buy a big brand new house. And
Right.
all I'm gonna say is this: look at a house as an investment more than you do as like a personal reason. I say look at it as an investment. That's what I would look at as an investment, as a house purchase. Because this is a thing, and then I want you to elaborate on how people contact you for getting their credit restored or repaired to get a house, like some of your
Mm-hmm.
stories that you have.
Right.
But I'm gonna say this first: don't fall into the trap that the banks that the banks and things make you feel good for making a long term investment. I'm not saying not to buy a house. I'm just saying that you are a home buyer until you own the house. You're not a home owner until you get that deed and the bank don't got it no more. So don't let them confuse you with the words home buyer versus home owner. You don't own the house until you pay them off. And if you
Mm-hmm.
don't pay them off and you miss 2 or 3 payments, they coming to get it. So make sure you look at it as an investment. So
Right.
how has home buying been beneficial to you? Like credit from the credit standpoint, from some of the people you have.
Uh, for me personally, you know, for people that study Robert Kiyosaki or Dave Ramsey, much of Robert Kiyosaki philosophy is that your home is a liability because it takes money out of your pocket.
Mm.
And through meeting you, and that's why I call you the cash flow king, I have learned how to make my home an asset, meaning that now the utilities that I'm paying in my home, a percentage of that is now tax deductible or tax write off for me. Square footage of my home that I use for business use, my phone that I'm coming before the people tonight, Facebook Live, the internet, all things that I would have been using anyway. Now my home is also an asset because at the time of me purchasing this home in 2011, I was actually the mortgage on this loan, and this is due to building my ex-husband and our credit. We were able to lock in the interest rate at
Wow.
3.75%, and
Stupid.
our monthly payment on this house was, I think, $100 more than what we were paying for a two-bedroom apartment. And so,
Wow.
to me, that made business sense in the long term. But of course, I would love for the people that I educate to have a bigger vision with their credit and learn how to leverage their credit to not just buy a house. You and I are both biblically sound people, and we know the Bible says that I will give you houses, plural,
With an
that you
S.
didn't build, right, with the S. I would love for people to learn how to leverage their credit and buy other homes and to have investment. But I have to take them one step at a time because for many of them, the first step is just owning and getting a house of their own. And I take them and I help them achieve that dream. And now I try to expand their mind by educating them on other ways to leverage their credit to build a higher cash flow than what they may currently have at this time. So that's the ultimate interim goal. But I do agree with Dave Ramsey on some things that you do have to take baby steps, and that's my mindset when dealing with people.
And you know what the words that I like that you use was to leverage their credit, leverage their
Mm-hmm.
credit. So many
Mm-hmm.
people get caught up in getting great credit scores only to go buy more stuff. That's
Right.
not leveraging credit. That's you leverage. That's you trying to leverage and make sure you can get more stuff. But what you want to
Right.
make sure you do is not only get leverage your credit, but as you're doing that, make sure you stay in a positive cash flow cycle. And we're going to discuss that more at the event on October 27th in Jackson, Mississippi. We're
Right.
gonna learn more at the event. So we're gonna skip to the next one. Next thing you
Okay.
have to do is to get three. Start off with 3 months, but 3 and then 6 months of what's called an emergency fund. Let me tell you this, and I want y'all to get this. If you don't get nothing else off of here, the difference between an emergency and an inconvenience is the money in your account. Let me explain. If I get a flat tire tomorrow and I don't have the money in my account to repair the flat tire, that has now become a what? An emergency
Right.
because you don't got the money. But if you get a
Right.
flat tire tomorrow and you got the money in your account, you say, "Oh, I'm gonna be late for whatever I had to go to. let me call the people. I had this happen to me. I was actually on my way to Little Rock because I drive an hour to work every day. I'm on my way to Little Rock, had a flat tire. Now the 2010 Kevin or 11 Kevin, if I had a flat tire, I'm like, man, how I'm gonna pay for this? How I'm gonna pay for this flat? Like, I don't got it. The 2018 credit, Kevin, the inconvenience, it was like, dang, not only do I got the money for the flat tire, let me call a tow service to tow my car to the place to replace the flat tire so I can be fine. I didn't have a spare. You know, it was an inconvenience. And so I just lost the time. But most people are living their life in an emergency state and they don't know how to get out of it. The way you get out of it is start to build your reserves up. Get you at least 3 to 6 months of an emergency fund. So when things happen, you got the money. You're not doing things in an emergency state. And so you definitely want to make sure you do that.
Kevin, Brett says maxing out your debt is not leveraging your credit.
Yeah, I mean that's real. I mean, what you want me to That's real. Brett, no. Hey, Brett already know. Brett, no. It's not. It's not. I mean, that's the thing that people don't understand is that when you max out your debt, sometimes you actually have worse credit because your debt DTI, your debt to income goes high. You got a lot of debt but no income. So that's real. That's real. All right, so I'm gonna share one more and then I'm gonna get the other 3 on Sunday. I'm gonna share one more and get the other 3 on Sunday. The last one tonight, and then I'm gonna let LaTanya kind of go over some credit things if she would like to. If not, we've been on here a long enough time. But if not, come join us October 27th, next weekend, next Saturday, from 10 to 3 at the event we have. Like, it's going to be great. I looked at LaTanya's layout for the credit training. It's going to be, look, you don't want to miss it. You don't want to miss it. If you can be there, we've had more people register, sign up for the event outside of state, outside of the
outside of Mississippi, right?
In Mississippi. It's crazy, but hey, we all good. We good either way. Good either way. Right. All right, last but not least, and I'm gonna break this down on the one on Sunday. So I'm gonna give you this, and you go look it up. Everyone go look it up tonight. Look, this is how you maximize your cash flow as well too. So get your 3 to 6 months in place. But this last tip is something that investors do, and investors know this. About, I don't know how many years ago, it probably was like 8 to 10 years ago, Warren Buffett and his hedge fund investor, a guy that invests a lot of money, made a challenge. They said this. They said, I bet you, Warren Buffett, that I can outinvest whatever you put your money into. They had like a competition because Warren Buffett is like one of the greatest investors of all times. And so he got a challenge. It's like, I bet I can outperform you. Warren Buffett said, well, you know what? I'll put my money in an index fund. Write this down, an index fund. I'll put my money in the index fund and I'll beat you every time. Now, what is an index fund? You can go to Vanguard, Vanguard.com. Go to Vanguard.com, Vangaurd, Vanguard.com. Go to Vanguard and type in index fund, or go to Google and type in index fund Vanguard. An index fund is essentially, and I know Bob gonna get me for this. An index fund is essentially a fund that performs with the stock market. So it gives you the rates that the stock market gives you, which traditionally I think has been around 10 to 12%. And so by getting an index fund, you're able to have low risk, a pretty nice reward, and not have to worry about being a fund manager. You let them do it for you. So go to Vanguard, make that investment. You get 10 to 12% on your investment over the life of it. Really good fund to put your money into because it's growing at the rate or at the percentage that the stock market's performing. And Warren Buffett is winning right now. That's all I'm gonna say. Warren Buffett is winning right now from an index fund.
Okay.
And that's it. I'm gonna give that last, and we might take y'all to Vanguard's index fund on Sunday if we have the opportunity. But if not, go look it up for yourself. That's all I got for cash flow tonight. I share this video if you got value. Like, I know LaTanya gave some value. I gave a little bit. LaTanya gave a whole lot in the beginning. If you on here now, you just joined in, you want to go to the beginning of this video because LaTanya told you about charge-offs and how the banks really, really get you with charge-offs.